Ladies and gentlemen, good day and welcome to Kaya Limited Q3 FY21 earnings conference call hosted by ICICI Securities Limited. As a reminder, all 7 lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ruchit Kapadia from ICICI Securities. Thank you, and over to you, Mr. Kapadia.
Thank you, Nirav. Good evening, ladies and gentlemen, and welcome to the Q3 FY21 results conference call of Kaya Limited. We have with us from the management, Mr. Rajiv Nair, Group Chief Investment Officer, Mr. Vikas Agarwal, Chief Executive Officer, Kaya Middle East, and Mr. Saurabh Shah, Chief Financial Officer. Sorry, I stand corrected. Mr. Rajiv Nair is Group Chief Executive Officer, not Investment Officer.
No problem.
I would now like to hand over the call to the management. Thank you, and over to you, sir.
Thank you. Good evening, everybody. I welcome you all to the conference call on our company's behalf. Let me begin the conference call with a very short update on third quarter performance of Kaya Limited, which is already in public domain and uploaded on our website www.kaya.in. Kaya Limited posted consolidated revenue from operation of rupees 87.9 crores for the quarter ended 31st December 2020, a decline of 16% over corresponding quarter ended 31st December 2019. Consolidated EBITDA is rupees 18.8 crores as compared to 17.1 crores in Q3 financial year 21. Consolidated PAT, profit after tax and minority interest for the quarter ended 31st December 2020 is break-even as compared to loss of 21 crores for the corresponding quarter last year. Collection in India has achieved 69% for the quarter ended December 2020 as compared to previous year. However, collection at clinics in India has achieved 72% of the business in December 2020. E-commerce business in Q3 financial 21 grew by 14% over Q3 financial 20. Collection at clinics in GCC region in Q3 financial 21 was approximately 95% of Q3 financial 20 at constant currency, while clinic has achieved approximately 99% at constant currency in business in December 2020 as compared to previous year. All GCC countries showed good ramp up in December 20. UAE at 98%, Saudi at 102%, Oman as 1% above the previous year pre-COVID levels. Some cost rationalization measures which has been initiated by the management due to pandemic have resulted in saving of cost of rupees 16.4 crores over the group in Q3 financial 21. Overall, Kaya operates to 73 clinics in India and 23 clinics in Middle East. The beauty and wellness industry, including retail industry, has been adversely impacted due to the spread of COVID-19. The group has begun restoration of clinics operation in UAE from second fortnight of May 20 and in India from first week of June, and has been operating the clinics as permitted by the government and local regulatory authorities with the control movement, maintaining social distance, taking appropriate hygiene measures, and following the directions of the regulatory authority. The group has evaluated impact on its business operation financial position based on its review of current indicators of financial economic condition. The detailed information update is already available with you. I now open the sessions for questions and my colleagues and I would be glad to answer them. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Chirag from Madinath. Please go ahead.
Hello, sir. I have a few questions. I'm asking one by one all. as lockdown in most of, and like we come from this situation completely out in terms of like shutting of malls and all. So at this moment, are we getting the traction similar level to what we were getting pre-COVID, or still situation is not normalized?
Yeah. No, so this is with two different markets separately, or are you looking at India specifically?
India and overseas both.
Yeah. I think if you look at the India indications of lockdown, of course, we started almost like the start of the second quarter, where there was the business actually just about opening up in the month of July. And by December, the business had progressively ramped up as far as India is concerned. India, actually, in terms of customer walk-in or footfall that we are talking about, we had reached about 81% of customer count at SSG level. Now, one thing to understand is that numbers of last year and this year are not exactly comparable, because last year we had 95 clinics, today we have 73 clinics, so there is a gap there. So if you look at on an SSG basis, the customer count was at 81%, and the business had recovered to the level of 84% on collection and net revenue of 85% by the third quarter, which is the October through December quarter. Okay, and as far as Middle East is concerned, we had actually got good ramp up across geographies from an early stage. And by the month of the last quarter, we had reached 92% of our net revenue in the Middle East geography. And on collection, we had reached 95% overall. So I think that's the ramp up that we have seen in the market. So anything specific on the lockdown you would like to know? Because customers, to the extent of about 82%, we have started receiving in the same store over last year.
Okay. And sir, if I look at your restructuring exercise, it is more of last 1 year, 1 or 2 years particularly. It is more for India centric. So for next 5 or 7 years, are we more focused towards Indian market? Is it right to say?
Not really. Actually, India had a lot more clinics than Middle East. Middle East has a very focused portfolio of clinics and spread across multiple geographies. India had a lot more clinics in India in the country, and there were some clinics which were EBITDA neutral, EBITDA negative, or marginally profitable. So those are the clinics that we have rationalized in India. So the bulk of the restructuring of clinics has happened in India. Middle East will keep continuing to review the performance of clinics, but there are very few clinics out there, or in fact, most of the clinics out there are EBITDA positive, and quite a few of them are strong clinics from an EBITDA perspective. So we are not looking at any rationalization as such in Middle East, which is there. From cost rationalization perspective, both geographies took cuts during the last quarter and the previous quarters to reduce the cost, but that was more to do with the pandemic situation, because we knew top line will be impacted. So both markets, we took some cuts during this period. So overall, I think we saved about 16 crores in the last quarter on account of cost savings alone.
Okay, that's great. And one last question from my side. On product selling strategy, what strategies we going to use going forward to increase our product revenue versus service? Yeah, throw some light on it, sir.
Yeah, a couple of things. We are increasing our focus on e-commerce, and we'll continue to pursue our interest in e-commerce. One is through the partner websites. We are pretty strong on Amazon and Nykaa. We are pushing for more business through Flipkart and Myntra as well. And we will also be relaunching, in fact, our own D2C site in India, which is the kayabrand.com website, which will happen over this quarter. So obviously, I'll be able to report more in terms of performance of our own website in the coming quarters. But the focus is on e-commerce and focus is on clinic. Clinic also, we are doing a lot of work around our staff training and skilling on selling of products. The quantum of money that we are going to be putting going forward towards advertising for products will also, as a proportion, increase. And e-commerce also, investments on marketing towards e-commerce will increase. So that's what we are doing. Currently, we have put a pause on GTMT expansion at this moment because those were underproductive businesses for us. But as the market opens up and we see the other side of COVID, we may pursue those interests in future. Currently, we have put a pause on GTMT business.
Okay, sir. Thank you.
Yeah.
That's a pleasure.
Thank you. Thank you.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. So I just wanted to understand, like, if I see last 10 to 12 quarters, this is the first quarter where we were able to break even at the PAT level. Now, this might be on account of the cost savings that you are talking about. So can you run us through to kind of indicate what's the potential for us in the next 2 years, considering the cost savings that we have done or the business traction that you are seeing? So are this break even is a sustainable thing going forward? So,
Yeah.
So the comment,
Okay,
anything on those front would be helpful, even on the
Sure.
top line and the margin front. Yeah, thanks.
Sure. So a couple of things. One is that we have seen significantly faster ramp up of business than what we would have anticipated way back in the first quarter. So both geographies have reached more than 80% of the performance of the business post, after lockdown started and lockdowns, kind of was removed in countries like India. Middle East actually did not have a longer duration lockdown, but we have reached almost 92-93% in Middle East. India has reached about 81%. So one good sign is that we have been able to also look at ramp up of the business during this particular period, which is actually a COVID period. And because we are a touch and feel business, there is also an apprehension that customers may not end up coming to our business. But that part of the story has been, I would say, well managed. And we have seen good growth over the last few months in this area. Secondly, I think our e-commerce, while the post-Diwali business was not very good, we still got about 15-16% growth in this quarter, and prior quarter was higher. We do expect that the e-commerce will continue to be high double-digit growth that we can actually see going forward. So I would say we would definitely like to keep improving on our top line. And this quarter we will try and get very close to last year's turnover that we actually got as far as this is concerned. Second is that we are also working aggressively on various initiatives around our cost of goods sold to keep improving our margins, both in India and Middle East. So we do hope we will be able to make a difference in terms of performance on the margin side for the business. Cost control, some part of this cost may this benefits that we have got in terms of cost will continue to accrue in the coming years, but not all of it. Maybe rentals, for example, we may not be able to bring down considerably next financial year. But on the employee optimization, which is productivity and number of employees per clinic, we will definitely continue to keep our efforts to keep the employee strength optimal. We have done some rationalization exercise on the back office in terms of overall cost and also employee cost. Some part of that will continue to accrue in the next few years as well. So all in all, we have looked at multiple areas of cost rationalizations. We'll continue to try and move as much of that we can into the coming financial years. But more importantly, we will also look at how to ramp up our turnovers and also look at our GC gross margins by actually working on our cost of goods sold. So that's broadly what we are trying to do. I cannot probably give you an indication of what will happen next year and next to next year. So that's the, yeah. Any other questions in addition?
So the line for the participant dropped. We move on to the next participant. Participants, you may press star and 1 to ask a question. Next question is from the line of East State from Annual Wealth. Please go ahead.
Yeah. Hi, good evening, sir.
Hi.
Congratulations on very strong improvement this quarter to the entire team. So a few questions that I had. One is on the India business. So when you say that we are at 81%, what do we mean by 81%? Does this 81% also include the 27 crore of annualized run rate that we had from the shutdown clinics, or this 81
that is the SSG growth of 81%.
Okay.
The shutdown clinics are not included in that in terms of total numbers. So if you look at it last year for the same quarter,
Sure.
as an overall number, we had about 59 crores, which was the total number for the quarter for Kaya India, which is 41 crores this year. So that's a decline of 31%. So including all the clinics, which are including the shutdown clinics, the number is around 70%. But if you exclude those 25 clinics, then the number is 81%.
Okay. And when you say that we're hoping to reach at least last year's turnover by Q4, you're talking about excluding that 27 crores of sales, right?
Excluding the 27 crores.
Okay.
Yes.
Then the second question I had was, we have saved about 16 crores of savings because of cost rationalization in this quarter. Now, out of this 16 crores that we've saved, how much of this is sustainable over the next year, basically?
So some part of the saving is coming out of the shutdown of clinics. So that will be anyways, going through into the next financial year as well.
Sure.
But we are working on various other levels of saving within the business, both at the front end and the back end, which is also quite a bit of learning that we got during the pandemic. And we will try and move that cost into the next financial year as well. So, Saurabh, would you like to give a breakup of the 16 crores between the like-for-like and the shutdown clinics?
Yeah. So, Ishit, 16 crore out of this around 2 crore to 2.5 crore is from Middle East. 14 crore is India overall saving. 8 crore pertains to the closed clinic. So overall, if you ask me, around 6 to 7 crore is the on the like-to-like saving coming in this quarter, flowing in this quarter.
Yeah.
Sure. Now when I sorry.
Yeah, please, Ishit.
Yeah. So when I talk about this breakup, 8 crores is something that is sustainable. It's never going to come back to us.
Yeah.
Now, apart from that, the remaining balance 8 crores, how much of it can be sustainable as clinics ramp up?
Yeah. So, Ishit, I cannot exactly quote a number as to what will go into the next year. I only want to tell you that we are doing some work on almost like looking at it from a zero-based perspective. We've already done some work on it, but I cannot probably reveal the numbers today. But we are working on all ends of the business, right up from the infrastructure to the people to rent. But I probably won't be able to give you an exact number at this point in time. But the effort is on to take whatever is the like-for-like saving, which is the same store saving, some part of it to move into the next financial year. We are looking at rent renegotiations at this moment for the next financial year. At the same time, also looking at the quantum of labor or people, both at the front end and the back end, to actually ensure that the employee costs, some of the savings that we got this year, some of it was because of merely salary corrections or cuts during this year. But part of it could be in terms of number of people managing the clinics and the back office. That's something that we will keep continuing to look at. So work is happening, but I don't have a number to share at the moment.
Sure. Okay. Sir, the second question that I had was probably for Vikas, specific to Middle East. Now, I think in Middle East, what we've seen is that overall the ramp up has been very, very good. If I see year on year. However, I think we are still looking at a PBT loss of 2.5 crores basically at the Middle East level. Now, this is in spite of all the cost reduction efforts that we've taken in the in the pandemic year that we are facing. Now, how do we look at in terms of sustainability of Middle East operations and going forward? How are we likely to come back into the black in Middle East?
Hi, Ishit. So, if you remember last time we discussed this. So one good thing is that our business is ramping up. So in December, we've actually, on a pre-COVID base, almost exceeded last year pre-COVID. Now, that is the key thing to Middle East, because we do not want to hold back costs which will hamper the business growth. And a lot of costs that have been put in, where you see lesser savings, are costs at that level which are directly impacting business. And we're seeing a brand presence, we're seeing a customer traffic which is ramping up almost to the pre-COVID days and increasing. And we want to make sure we ride on that. And I think the story here, of course, we'll do a lot of efforts on costs. Like Rajiv said, we're doing a zero-based budgeting, and we're making sure that as much cost we can carry forward, we will. So that goes without doubt. But I think the story of growth is more important, which will turn around the profitability of Middle East. So we've seen a transition from last year, or let's say last 2-3 years. If you see the numbers, they've moved with the cost. Now the next move is going to be growth, and we're sitting in December right now, which is not even 6 months of COVID. So we're very optimistic that that is going to be the next turnaround of the profitability in the Middle East.
Okay. So just on this, Vikas, if I may ask, what kind of cost, savings that we did for, say, Middle East is kind of sustainable from your experience, basically? I understand we have to drive revenue growth, but some part of the cost savings will be sustainable?
Yeah. So there are 3 heads which where we are focusing the most on, which also impact business growth lesser. One is the backend, and we've done a substantial reduction there. Not all reduction will carry forward, but there will be some reductions that will carry forward because of the lean structure, because of the costs, overhead costs that we've reduced. And there is rent. So in COVID times, we've negotiated rent, while a part of it was in the lockdown phase, but there is a part which is also going to carry forward. Then clinic overhead. So again, it's an opportunity for us to relook at all the overhead costs at a clinic level. And there we've got some bit of reduction there. So again, like I said, these are 3 areas where we'll continue to put pressure, a lot pressure, because they don't directly hamper business growth. But when it comes to, for example, front-end employee costs, that is where maybe the reductions are not going to be substantial, because we want to make sure we have enough resources to grow. Anyways, Middle East is a very lean structure when it comes to employees, and per employee output is high. So rent, clinic overhead, corporate overhead are 3 areas which are going to be more impacting.
Correct. So can I say that in this quarter, the 2 crore kind of saving that we had, because we are already at 95% of pre-COVID levels in this quarter, that 2 crore that we had per quarter is something which is more or less sustainable?
So again, like Rajiv said, I don't think we can give you an indication, but definitely what we can say is that that is one of the biggest focus areas for us. In fact, we're relooking at everything in Q4 again before we enter the next year. So we're trying to maximize as much as possible.
Sure. And one more question that I had was, if you could just share the customer count for India as well as Middle East and the growth year-on-year.
Okay. I'm going to talk about the Middle East numbers, then Rajiv. Please. So on a pre-COVID base, in Q3, we're at around 87%. In December, though, we've ramped up to almost 97-98%. So we have lost a base of clients in laser, but we've covered a lot more clients in our core verticals, which is helping grow our client base. While the business ramp up is happening faster through ticket size right now, and we were expecting that, so the client traffic will build up slower than the ticket size with the inputs we have put in. But now the client traffic is seeing a traction. Does that answer your question?
Yes. Ishit, for India, the SSG customer count is for the quarter about 81% overall, which is there. So I think the good news is that clients who are existing clients have come back in good numbers, and especially the premium consumers who used to come have come back to the clinic So when we look at it from the Skya Smiles program or the loyalty program. So we got a good win back on platinum and gold elite customers that we have today. But overall count has been at 81% of last year.
81% of last year. And
last year, SSG basis, SSG basis.
Yeah, sure.
Same
SSG.
Yeah.
Yes. And what would be the number in December 2020, like how we said in the Middle East?
December 2020, the clinic collection was at 92% of the total, which is there. I will not have the exact breakup of the December month in specific with me, but if you want, I can share that with you separately. But the number, when I say average is, 84-85%, the December number was higher. At 92% in terms of SSG collection, which is basically customer, buying from the clinic. So obviously the customer traffic number would be higher than the average of the quarter. Now, in our case, the only 1 month which otherwise in other businesses is very high and very strong is actually the November month when Diwali comes. But for us, that period of 2 weeks and 3 weeks of Diwali is actually a lull period, because people don't do services in clinics during that particular period. So for us, actually, between December and October were very good months. November comes down a bit because of Diwali.
Sure. And one last question I had was for Saurabh. Saurabh, can you just share the net debt figure as on December ending?
Ishit, external debt as on December is around 16 crore. That's all we have in the system.
And the debt from the promoters?
That is around 24 crore. So Kaya India is still not drawn on to the fullest extent. So only 24.5 crore is 24.5 crore is the outstanding.
So totally we are at around 40.5 crore, right?
40.5, correct.
Okay, and the repayment of 2 crore per quarter in the Middle East business is on track, right?
Yeah.
Repayment of debt? Yeah, absolutely.
Yeah.
Okay. Thank you so much. I'll come back in the queue for more.
Thank you, Ishit.
Okay, thanks, Ishit.
Thank you. Yeah.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. The next question is from the line of Ruchit Kapadia. Please go ahead.
Yeah, thank you. A couple of questions, sir. One is, could you please throw some light on the capex guidance for FY22 and FY23?
It's too early for us to comment on it right now. We cannot give you any guidance right now.
Okay, sir. And just one more thing. Now that many service providers are giving beauty and grooming services at their homes itself, the clients' homes, so does Kaya have any such plans to enter this similar segment?
Good question. I think it's a booming industry right now. But the type of services that we do are medical services. Our services, facial, simple services like facials, also medical facials. Sometimes we do a combination of machines and chemicals. It's very difficult for us to do that at the home service. So we definitely do not see ourselves in the home vertical in the near future, for sure. At some point, if we are able to bring more flexibility to the equipment that we use in the clinic, we probably can do some services at home. At this moment, there is no such plan.
Okay, sir. Thank you very much.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Thank you very much, sir. So last time the line got actually disconnected.
Yeah, sure.
So I could not understand or get what you were saying. So for the sake of repetition, I would just point out my question. Basically, what's the potential of our business for next 2 years that we are seeing, and the break even that we have done? So how sustainable is that? Yeah.
No, actually, I cannot give you the numeric indication there. So I was just basically saying which are the areas that we are focusing on for the next financial year based on what we've been doing over the last previous few years. So we are looking at various new avenues for growth. One area is, as I mentioned, e-commerce, which will be something that we are going to invest fairly aggressively on, including our brand.com, which means our own website that we'll be setting up for India in this quarter. Middle East already has revamped its website. So we do expect e-commerce to be one area to move. We are looking at some collaborations. So recently we tied up with CureFit in Bangalore, and that's a pilot that we have started just now. So all our clinics in Bangalore are now listed on CureFit, and you could buy services on the CureFit platform for people to come to our clinics, in Bangalore. And we are at a current pilot stage, and if that pilot stage works, then we will ramp it up, in all the cities that they are present in. So that's one thing that we're doing. So that's a digital collaboration. Our own website will also have an ability for people to book appointments online, which we today do a lot of bookings through call-outs into the clinic or call-outs from the clinic to customers. So that's something that we will be enabling on our website. So services booking can also happen online in future. That's something that we are working on right now. E-commerce of our own will also happen through the brand.com website, which we are doing. And obviously we do partnerships with Amazon, Nykaa, Flipkart, Myntra, which will continue to push for growth in e-commerce. So that's the thing. So clinics, actually, while we do our own advertising, as I said, from collaboration and through the digital route, we will try and get more footfalls into the clinic through that route.
Understood.
And also one last thing I'd like to mention, I think Ishit or someone actually mentioned about the closed clinics which we have, which are about 23 odd clinics that we have shut down. We have done an aggressive campaign at this moment in time, which will continue all the way into the next financial year, where we hope to get, in fact, already getting almost 1 crore per month from customers who are from the old clinics coming into the new clinics. And we are doing specific campaigning to those customers and specific offers to those customers to come to the newer clinics which are there. So we do expect an extraction of some of the revenues from those old clinics into the new clinics. So that's another area that we are working on right now.
Okay, understood. Fair enough. Understood this point. And what about the sustainability of break-even? Is there any comment that you want to make?
You see, I can't give you a comment. I mean, you must have seen the efforts we have taken in the last 6 to 8 months on cost side and also the ramp up of revenue. So we would like to continue to utilize this momentum towards improvement of revenues, both on the product side and the services side. So that's one thing which is there. As I mentioned, from a GC perspective also, we are working fairly hard to improve our cost of goods sold. So that's the second area. And cost part, as I mentioned, we are working on zero-based cost working at this moment to ensure that some part of what we have saved in this financial year is able to move into the next financial year as well, and next few financial years as well. So that's the activity that we are currently working on.
That's great. All the very best, and
thank you
from my side.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask the question. Anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Ridhima Chandak from Roha Asset Managers. Please go ahead.
Thank you for the opportunity, sir. Sir, we have different services like laser hair reduction, brightening and pigmentation, anti-aging, and many more. So, among all our product segment, which segment is gaining more traction you are seeing in the market?
Yeah,
and where you are investing?
Yeah, currently I think our largest segment happens to be laser hair removal, where we have almost reached last year's numbers right now in terms of service revenues, despite of the pandemic. But people are finding it maybe safer to do laser hair removal instead of doing waxing in parlors or salons. So people are actually coming in for more laser in the India market. We are also seeing significant ramp up during the COVID period in the acne scar segment, where also we have seen significant improvement in terms of people coming for services. I don't know whether it's a new concept where people who are wearing a lot of masks all the time also suffer from adult acne, and reasons of which people seem to be coming more for acne scar. The third vertical which has ramped up is actually anti-aging as a segment, which is also picked up, because earlier when we started, people are not coming for any injectable services which are there. Now services like Botox and fillers have also ramped up over the last quarter. During Diwali and post Diwali, we have seen good numbers that are there. Certain services are still not picked up. For example, the beauty facials are really low at this moment because of the touch feel factor, because without touching the client's face, it's difficult to do beauty facials. So people are still not very satisfied with the service of beauty facials. So I think the numbers are still pretty poor in comparison to last year. Products have ramped up, but not as much. We have seen about 28% decline in terms of SSG product growth in the clinic. But considering that our overall recovery was about 84%, products are at 28% decline, which is something that I think is another area that we are trying to push towards. So in summary, hair removal is the category which has picked up the maximum, followed by acne scar segment, which is there. In brightness and pigmentation that you mentioned as the segments, NS pigmentation or brightness pigmentation, we have seen a decline of 27% in the category in the last quarter on an SSG basis. While peels as a service has done extremely well, doctor-led peel service has done extremely well. In fact, it's growing on last year. We have actually seen a decline in Q-Switch, which is a machine-based service, over the last few months. So that's the reason why maybe fairness pigmentation is not picked up as much as we would have liked it to be.
Okay.
Yeah.
And as we have almost at the end of FY20, we have almost 100 plus expert dermatologists. So as of now, is there any rationalization in that number?
Not really. We still would have more than 90 plus dermatologists in the business, and we'll continue to have that. The number of dermatologists per clinic or number of part-time dermatologists working for Kaya is limited now. Most of our doctors are working with us for more than 36 hours in the clinic. So I don't see much more rationalization happening on that count.
Okay. Okay, sir. Thank you.
Yeah, thank you.
Thank you. The next question is from the line of East Seth from Annual Wealth Management. Please go ahead.
Hi. Sir, one question I had was, can you just highlight a little bit on how the competition has fared both in India and Middle East?
Yeah. Actually, one of the things that I cannot probably quote is the, sources or people directly. But I would say during this particular period, we did see some of the competitors, some of the known competitors in the market facing significant cash flow challenges. While we continued to pay our employees on time for the last 8-9 months, we've seen significant issues with employee payouts with some of the partners over the last 6 to 8 months time. So, salaries were delayed. Sometimes incentives were delayed and stuff like that. So that gives you an indication that there's been a lot of cash flow pressure in the last 8 months in some of the key competitors in the market, also in Middle East for that matter. So that's something that I can tell you right now. What impact it will have in the long run, we really don't know. What impact it will have, whether the continuity of some of the businesses and growth of some of the businesses will not sustain, I really don't know.
Okay. But in terms of competition, is it fair to say that where Kaya India and Kaya Middle East has reached, competition would be substantially lower? So that means that there is a preference towards Kaya?
Yeah, I really don't know. There are conflicting numbers that I keep getting. I spoke to somebody fairly senior today, and by the and person from the retail industry, and he said the kind of ramp up that we have seen is probably better, much better than that of the market. We had seen between 65% to 70% achievement of last year's number in some of the related industries, like for example salon and salon services, which are there. But I cannot be completely sure because we don't have any written numbers available with us for the last quarter, so I cannot really give you that indication. But we do believe we have done better than that of competition.
Okay. And so secondly, in terms of how we are placed for maybe next couple of years, I mean, the pandemic was a big challenging year for the entire industry as well as for us, basically. In terms of how we are placed and how we are looking at growth for the next couple of years, because we have three key events for us. For example, in Middle East, we'll have the Dubai Expo, which is going on, which attracts so many tourists. And when I look at India, with the consumer sentiment improving on a daily basis, where you're seeing FMCG growth in high double digit. How are we placed, and how do you see growth happening, for the next couple of years for us and the industry too? Just give a sense of your understanding on the same.
Yeah, so I see one good thing that you mentioned is sentiment is definitely improving in India. Middle East does have some COVID headwinds in the recent past, while it's been relatively secure from COVID for the last 8 months. But vaccination is happening at a very, very fast pace in the Middle East. They actually want to get their entire population, Vikas was telling me, vaccinated before the expo. So which means the fact that the region or geography will be fairly safe by the end of first quarter is what we think. India sentiment will be high, but vaccination will be slow. So I think there'll be a bit of caution in the market, at least for the first couple of quarters, in terms of the what do you call it? People will still be little more cautious about things. It won't be as bad as last year, but people will be cautious is what we think. So to that end, which is there. But one good thing is the fact that because we are into physical services and touch feel based services, because we have reached 81 and in the case of December about 92%, I'm pretty hopeful that we'll see good momentum in the first 2 quarters of next year. But difficult to say right now as to how the entire vaccination will pan out and how the market will keep behaving over the next 6 months, which is there. But I think sentiments right now are pretty much positive.
So, no, because Rajiv, what I was alluding to is, if you see how COVID had played out in India, I think the larger cities were much more affected than the smaller towns.
Correct.
And Kaya being larger city kind of a player, the rebound also should be very, very swift for us. So is that something that you all are anticipating for next year? Is what I'm trying to get.
So obviously, yes, there is positivity, which is there. And as you mentioned rightly, cities like Mumbai were extremely badly affected with COVID in comparison to other cities. If you see Delhi, Bangalore, Bombay was more affected than that. So obviously, the rebound cycle will be better in the market, but it's extremely unpredictable at this moment because we are all hoping around the vaccine. Things move up and nothing happens as a second wave and stuff, which will be there. And Dubai currently is facing some challenges with increased number of cases.
Right.
But we can't really say honestly. I mean, cities like, I discussed something with one of our directors in France today, and suddenly the cases have increased, because of the UK variant.
Correct.
So it's very difficult to say what will happen in the next 6 months. We can only hope that the vaccine sentiment, because of the vaccine, the sentiment will continue to remain positive. And as you said, the cluster B cities will continue to, be resilient and good. Cluster A cities, which were very poor last year, will start having better sentiments and emotions this year. And already you can see people going into malls and all over the weekend and, food outlets and stuff. So I think definitely the mood is definitely more upbeat right now.
Okay. Sure. And Rajiv, one last question was on the rent negotiation part. Some of it, can we assume that some of the rent negotiations that we've undertaken in India as well as in Middle East, here to stay with us longer term basis, like probably a couple of years, if not
Yeah, I can only tell you that we are negotiating. I don't think the rent scenario is going to really be very solid next 1 or 2 years, and people are going to pass on a lot of benefits in the next 1 or 2 years. But what we are trying to do is some of the escalations that we are coming across, which is every 3 years we have an escalation with some of the partners. We are trying to see whether we can keep that steady instead of getting an escalation right now. So against the growth that we were predicting on rent, we may probably see a upside. But whether people will cut rents next financial year, honestly, I don't see that situation.
Correct. Okay. Fair enough. Thank you so much.
Yeah. Thanks a lot.
Thank you very much. Ladies and gentlemen, that was the last question for today. I will now hand the conference over to the management for closing comments.
Thank you.
Saurabh?
Thank you. Just to conclude, the group is closely monitoring the developments and possible effects that may result from the current pandemic on its financial condition, liquidity, and operation. It is actively working to minimize the impact of this unprecedented situation. Thank you very much.
Thank you very much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.
you.
Thanks.
Thank you.